The Nigeria-South Africa Chamber of Commerce August 2016 breakfast meeting focused on the Nigerian OTC FX Futures market and its prospect for developing the financial market space. It was an opportunity for stakeholders to gain insight on the dynamics of the market from the CEO of FMDQ OTC, Mr. Bola Onadele Koko.
Exchange risk is a major issue in the life of any corporate. And the drivers, as you all know, are the financial markets, international trade, as we are all understanding more in Nigeria, inflation, which is biting hard at the moment and rising, and then political landscape with all the security tensions all over the world. What are the key success factors to operate a derivative market? The first is credible price formation. Those operating in the market must believe that the prices are credible, either in the spot market or the derivatives market itself. There has to be liquidity in the spot market to support the derivatives market. Market confidence is very important, and in actual fact, liquidity comes on the back of market confidence. So what are the possible ways of hedging in the Nigerian FX market at the moment? The first, which most of us in this room will be used to, is what we call the outright forwards. Under the outright forwards, you agree the rate with the counterparty, you agree the settlement date, which is also the maturity date, and the principals will move. So an example is I'll buy $1 million from you at $350 come December 24. December 24, you deliver $1 million to me, and I will deliver 350 million naira to you. So that is outright. What are the benefits of the product? When the central bank came out with these quotes, indeed, if you were sitting offshore with dollars, you look at selling spot to the market at 280. You look at the first set of quotes, there was actually April contract at 210. So you sell dollars at 280. You cover your exit at 210. You can imagine the yield you have, because the naira you've also brought into the country from your dollars, you invest in treasury bills, which is why treasury bills today have been positioned at yields of close to 20%. So we can use this to attract inflows, and it's beginning to work. You will remember that before the market opened, we had pegged currency for 15 months. So a lot of people had said, why did you give this sort of wonderful yields? The reaction is, if you have messed up, you have to pay a price, number one. What we're hoping to do in the next 2 days is to also offer this to Nigerians, so Nigerians have the opportunity to invest their dollars at this sort of interesting yields. I'm talking of yields close to 30%. So we're hoping this product will be used to activate liquidity in the spot market. As I said, it is beginning to work, not that it had worked fully. It will also attract investment, because people bring in dollars to this country and they're unable to hedge the exposure.
Mr. Ike Chioke, CEO of AfriInvest, Mr. Yomi Balogun of Global Market Sales, Stanbic IBTC, and Mr. Bola Onadele Koko speak further on the OTC FX Futures market.
It's a very big step for the market, for the Nigerian economy overall. You recall that prior to the introduction of this market, we had a sustained period of an artificial exchange rate that was pegged at 197. And then subsequently in June, the CBN announced they were going to be coming up with this new platform. And then early July, they started. You can see, obviously, there's been more volatility in the foreign exchange market in Nigeria, with the naira now at around 315, 316. Investors are still sanguine. A lot of people are still standing on the sidelines trying to understand the depth and the liquidity of this market. And a session like this morning, where Koko Onadele, the MD of FMDQ, came to explain to a wide section of corporates and treasurers, was exceedingly helpful. I, for myself, found it personally enlightening. And the aspect that's quite critical from my point of view was there's actually a lot of investment opportunities for Nigerians who are long dollars. You know, a number of Nigerians don't realize as with the way the FMDQ market is structured and the futures overlay, which is explained this morning, you can see yields in the high double-digit areas if you're able to bring your dollars in, get your certificate of capital importation through the appropriate brokers, such as AfriInvest, and then we can invest it in T-bills for you. And then at the same time, you're able to hedge yourself on the futures market. Now, when you want to go out, you go with your CCI and repatriate your dollars plus your returns.
Speaking to the FMDQ OTC FX Futures market, I think the first challenge we had as a bank was to really understand the product and where to place it in our product portfolio. So if you look at the product, it is like a hybrid. So it's in between a futures exchange and a non-deliverable forward. And that was our first challenge. And also initially, we were not too clear around the rules guiding operations in the market. And but as time developed, the FMDQ has been very, very proactive and has been regularly issuing new guidelines and changing regulations, and also keeping the market abreast with the developments. So we have evolved from the stage of not understanding the product to understanding it, and also now having clear definitions around how we can participate in the market.
The Nigerian market has been challenged with high volatility. And at times, this volatility comes after a long period of artificial stability. The central bank, as you're aware, has now decided that it was important to kickstart the hedging. At times, I don't like using the derivatives, the hedging products. And the way to do it in a nascent market is to be the major liquidity provider until the market takes over. After the sort of fixed exchange rate system we operated, the central bank, and I think almost all the Nigerian economic participants appreciated the need to go for flexible exchange rate. And the central bank then decided to take an additional step, and that step is providing hedge, because a lot of people will be worried when you've pegged for a period, by the time you open that and go flexible, the currency will first over-devalue the currency before it starts retracing itself to find the appropriate. If you read some of the literature, the research, even from IMF, may have been that the currency should be at 240, 250. So what we've seen now is that overvaluation, and it's going to start coming down. The central bank has offered this product to take the lead in providing the liquidity. And over time, the banks too will start coming to offer quotes. But what is unique is it provides stability to businesses. Business planning can be improved. Businesses can hedge the exchange rate exposure. Offshore players that want to come into Nigeria can also come, knowing that they can hedge their exit, because this is the first period, the initial period when the market, by next year, things would have become better. The market becomes more liquid. It wouldn't stop the hedging product, because you need to have this hedging product for so many reasons that destabilize, factors that destabilize the FX market. You saw some of them in the presentation. The financial market itself, geopolitical tensions, economic fundamentals. Every day the exchange rate changes in a country or in any market. And you need to provide this hedging product for businesses so they can focus on what they're doing and neutralize that FX risk.
Since the launch now, are there significant milestones or achievements on ground that people will look at and say, okay, this is really working?
Well, the launch, and I think you were at the launch that very day, no transaction was done, it was zero. Today, I think the outstanding is $2.5 billion notional amount of contracts that have been hedged in this country. Essentially, these are non-deliverable forwards, but it's the first time we've had this sort of liquidity in the derivatives market immediately after the sort of currency peg we went through. My belief, as I said, is as things improve and the curve in the quotes themselves improve, you're going to see more liquidity from the banks themselves.
Ever since its launch, the Nigerian OTC FX Futures market has been viewed as a veritable platform for driving liquidity, system stability, and transparency to the Nigerian forex market. Analysts, investors, and other key market stakeholders will be watching closely on this.